Okay, I want to bring in Robin Cross, and he is with StoneX in Chicago. He's our weekly contributor talking about the lumber market, and it has been equally wild. And Robin, thanks for joining us here today. What kind of an adventure have we been on already this morning?
Man, Marlon, good morning. Thank you for having me. And, volatility is usually the name of the game in lumber anyways, right? But throw all this outside factors into it, and it's really way worse. So we'll go through some prices before we dig into it. March is trading right now at $1,300 even. That's up $23. But we did make a low today of $1,277.70, so it's kind of been all over the place. In the pre-market open, it was actually showing limit up. So things change very fast around here. May, which is now your lead through open interest, is trading $1186.20. That's up $1240, 113 trades over there. And I'm even going to talk about July today because there's a lot of interest. So you have $1064.80, so it's quite a big discount to the front two. That's down $1290 with about, I call it 25 trades or so today. So, we've been talking about this crazy volatility for these past, month and a half. And, I run a lot of figures and numbers to figure all this stuff out. And, traditionally, as you know, ag markets on the high side maybe go limit up or limit down 1 to 2% a year max, right? And lumber, just in the last 32 days, a month and a day, we're at 91% limit moves. I mean, that's insane. I can't even believe I'm saying it. Just in the last 26 days, we had 23 limits in opposite ranges, right? There's a lot of different factors in that, but man, oh man, has it been crazy. So the CME actually had to take some action in here. On our normal expanded limits, the limit's $45 on a day, which today we're on an expanded limit day. But as of May 7th, my dad's birthday, it goes up to 57. So that's you could possibly lose or make $11,000 in a single contract in a single day. So as far as the prices, we had that swing high before the market broke all the way down to 900 at 1338, right? Then we got back up, retested that high at 1336. So we kind of put in a double top, and it's been resisting up here, right? But cash is still around, call it maybe 1350. So even at contracts high, it's a slight discount. But we'll talk about that. There's record mill inventory on the ground. But because the transportation has just been a giant mess, I always talk about it. It's product to market. These guys are not getting the cars. But now you're starting to get a little blowback from the consumers are saying, hey, Rob, if I can't get ship dates on when I'm going to get this lumber, I'm just going to step away as opposed to chase it, especially without all these outside factors. And then as far as the contract, with this adjustment, margins to trade a one lot of lumber is up to $9,500 a contract. I mean, that's crazy. So guys still need to be defensive in nature just because it's so high. I would recommend options, but obviously with the wild swings, you got to kind of pay up because we're running at about, a good 60-70% volatility. So that's pretty high.
Absolutely.
Considering usually it's around 22%, right? And then I would say watch out for mill curtailments, and not obviously because of any other reason than transportation. And open interest, the last thing I'll cover, we're sitting at 844 in March. March is expiring on the 15th. And then May, your now lead is sitting at 1374. So we got a total of 2,800. It's slightly above where we've been trading pretty much all year at 2,200. So that's kind of what I'm looking at, good buddy.
Man, oh man, thanks for covering all that, Robin. Crazy times in that lumber industry, and you're right. I looked at a chart. It's just like it's full of gunshot holes in it with gap moves down and up. Thank you, Robin. Robin Cross of StoneX with us. We'll be back, and I'll cover livestock next.